We've got the JSE tracking global stocks weaker today, mainly as a result of expected economic data out of China and Japan, worse than expected rather, and that pretty much setting that overall tone for today.
Yes, very surprising. China came in with a deficit on its trade balance. It's had a trade balance last year on an average of $15 billion, and it came in at a negative trade balance now, so that was quite surprising. And Japan's GDP data was also low, so that put a little bit of a shockwave into the system, and people taking a lot of money out of the emerging markets now, and a lot of risk aversion coming through at the moment.
When it comes to that Chinese data, let's take a look at both sides of the coin here, because on the one hand, surely in South Africa, if we're reading into that those numbers, importing more, exporting less, it should be a bit of a positive for our mining sector.
It can be. Obviously, China. It's a good that China's not taking exports and making this economy just on exports, and imports obviously are a big part of its economy now, so that's very positive for South Africa. At the same time, it was the Chinese New Year for a week, and that data is probably skewed slightly. I think really what you're looking for is there's still growth in China. So if there is growth still in China, that's positive for South Africa. But I think we'll have to take a look over the next month to see if how much that China New Year, actually Lunar New Year, made a difference in those numbers, because I think it is slightly skewed.
Of course, that is the other side of the coin there. You know, it's that overall growth story that sprouts concern since our markets opened. I mean, Spain has been downgraded by Moody's as well. We've had, of course, as you've highlighted, Japanese GDP coming in lower than expected, and all of this working to increase risk aversion on a global scale.
Yes, definitely. I think that money will be going back into the Western economies at the moment. I think that the problem that Europe is facing now is that inflation is increasing quite rapidly at the moment, and ECB would like to put up interest rates, but at the same time, by putting up those interest rates, it causes more pressure on the sovereign debt issues. So they're in quite a sticky situation yet, and there's people waiting to see if they can actually put those interest rates up. We see Greece's debt now, 10-year debt, right up at the top. But beyond 10%, we see that the German inflation yield has actually gone up to 3.3%, and if it breaks and goes past 3.4%, it looks like it's a whole new cycle of interest rate cycles. If Germany increases past that 3.4, it'll be very difficult for the ECB not to raise interest rates. So we get into a cracks in the market now, and we have to see which way it goes from here.
Of course, within that global economic scenario, it's our resources sector hard hit today. What are you making of the commodity prices at this stage of the game, where the debate is around what's actually been supportive of them all along, actual demand or speculative demand?
Obviously, in the precious metals, it's a lot of speculative demand. We saw gold up to 1440, which was it was all-time high. We saw some profit taking come in now down to 1420, but I think a lot of speculation on the precious metal side. On the copper side, we see a very big dip in the copper price over the last few days, and that's more on a supply side and demand side. So a little bit of both on the metal side. I think that with the risk aversion still in the market, you'll see precious metals still stay firm. Now, if you take a look at the gold production numbers that just came out, gold production in South Africa increased another 15%. And I think if you take a look at the strong rand, even though that there's risk aversion, those increase in mining production on the gold side is where that strength in the rand is coming from.
Taking a look at that rand, I mean, it's remaining stubbornly firm. What's your outlook on that front? Because some are saying that we should expect to see it soften over the next few weeks, and of course that would be supportive of our big miners moving forward.
Yes, I think so. Business Day today said that China came in to buy with Seasware for 6 billion rand, and we'll see where that money flow is coming from. That could be a possibility of why the rand is so strong. Again, as I said earlier, that the amount of gold production has gone up 15%, and a lot of gold exports, which is also keeping the rand strong. Barring a little bit of downside on the gold price, maybe we'll see the rand weaken to about 7 rand, maybe 7 rand 10 again. And we'll see that will be quite supportive of our general miners.
Interesting movement. We were saying at the top of the show that we're seeing on Sasol, up and down. It's been as volatile as the oil price, the movement on that share price. What's your perspective on Sasol right now at around about the 370 rand mark?
Yes, I think there was a lot of speculation coming to Sasol as that oil price moved forward. And after the earnings, they had a good solid set of results. However, they have moved into extra purchase of 7 billion rand, and that purchase of the gas fields in Canada is only going to break even in 2015 and looking profitable by 2018. So I think that people are digesting those numbers and saying, well, they're not going to make a lot of money from that purchase, and a little bit of a profit taking coming into Sasol. It's now trading about 2% down today at about 263. I think there's probably more downside in Sasol if that oil price comes off, and you have to really look at getting into Sasol more at the 340 rand level.
Let's take a look at Sanlam. It's trading lower today, and we know that the market had been expecting a special dividend payout where the company has a lot of spare cash. That obviously fell short of expectations. Your overall impressions on Sanlam's numbers this morning?
The numbers were very good. There's two problems there. The one is that special dividend. People are expecting about 75 cents all the way up to about R1.50 of special dividend to come through, and the market is disappointed with that. Although they did increase their normal dividend by 11%. So that was slightly beneficial there, but I think people are waiting to see what they're going to do with their 4 billion that they have on capital reserves at the moment. They have said that they will be looking at acquisitions, and I think what the market will be looking at now is that if they're not getting that special dividend, they'd like to see some type of purchase in the next few months, and if that purchase doesn't come through, I think that you'll see a bit of pressure, selling pressure coming down onto Sasol at the moment, onto Sanlam at the moment, and people really want Sanlam to use that capital to get some growth. They said going forward they'll be battling for a little bit of growth, and not as good as 2010, so they really need to use that capital, and I think the share will be slightly will be under pressure over the next few weeks until they mention what they're going to do with that capital.